Welcome to this month's Market Trends Report, where we share the latest market conditions impacting real estate here in Northern Colorado. The first question most of our clients ask is, why are mortgage rates so high? Well, there's been an average spread between the 10-year Treasury bill and the 30-year mortgage interest rate. And that average spread over the last 10 years has averaged around 1.72%. Now, when we started to see rates drop about spike about July last year, it was about a 1% spread, and now it has grown to right at 3%. We believe that spread will come back down second half of this year, but not sure that it'll ever get back to 1.72% of that 10-year average. Now, if it comes back to 2.25%, we expect rates will drop below 6%. So we do believe that relief's in the way if the Feds quit raising rates. So does it still make sense to buy? Yes. One, you're building equity. You're building financial and generational wealth for your family. You're gaining long-term savings because each payment is a deposit of equity into your wealth deposit bank. And you're building your credit and gaining those tax benefits. And finally, you're taking control of your expenses. See, on a mortgage payment, it may be higher than your average rent today, but owning gives you a fixed cost going forward, and you have control over what you spend each month compared to renting, especially going out 3 or 5 years in the future. So home ownership still remains the best long-term investment, especially in the consumer's eyes. But in 2022, consumer confidence tanked as 37% of consumers believed our market was going to tank. And unfortunately, today, 1 out of 3 consumers still believe that prices are going to go down. So let's look a little deeper at the numbers and see what that looks like. Fannie Mae recently posted the latest numbers showing prices are finally starting to stabilize. We just came out of 2 amazing years in real estate with unprecedented high appreciation for consumers to build wealth, which many reference as the unicorn years, with double-digit appreciation, unheard of. Here, our showing traffic shows we're still above the normal market activity in normal market conditions. Median days on the market still well below the national average, 43. Our inventory is still well below the pre-unicorn norm, you would say, of 2.9 months inventory. And for those that are concerned about foreclosure inventory, we're still well below what the national average was pre-unicorn. Unfortunately, some people will lose their jobs and have financial devastation. And that's going to cause hardship. And unfortunately, that's something that's just unavoidable and is part of our reality, unfortunately. And it's been that way for many, many years. Now, locally, we're experiencing similar conditions as many of the other markets nationally. But fortunately, the Colorado Front Range still remains a very desirable place to live with great job stability and always having a high quality of life. Now that we're getting back into more of a normalized market, we'll start to see different seasonality spikes, which we did see over in May with the graduations and kids getting out of school. But looking forward in the summer months, we foresee an increase in inventory. We see rates stabilizing and hopefully start to see those rates inch down just a little bit more. So if you're curious what loan programs are available that meet your needs, or even how does the market affected my home value and my equity position, go to NocoMarketTrends.com and you'll be able to get all of those resources which we've made available. Additionally, we've also included many of our local market statistics here for Weld and Larimer and Boulder County to keep you informed and know where we are in the market. And as always, we truly appreciate your business and your loyalty, because when experience matters, you call the Kevin Schumacher Team.